Monefit SmartSaver currently offers private investors like you the only product on the market that provides an interest rate of 7.25% per year, with the option to withdraw your money daily. That's nice and all, but what is the actual risk involved in detail? That's exactly where I followed up with a few questions, and the answers are now available at Northern Finance. My name is Alex Black. Monefit SmartSaver presents itself as a major competitor to the well-known product Go Grow from Bondora, which more investors use but currently receive significantly lower interest rates. Instead of 6.75%, new investors only receive 4% interest per year, and this is during a time of rising interest rates. Monefit currently pays 7.25% and now also distributes this interest daily, which leads to a stronger compounding effect for investors. Instead of receiving 7% net, you will therefore receive 7.25%. I have also compared the two products in detail in this video, which I have linked for you in the info card and also below in the video description. Today, however, we want to specifically and explicitly address the risks associated with Monefit itself, as this return is, in particular, clearly a risky product. And that's why I asked Monefit some very detailed questions and also received good answers, which we want to go through today, among other things. I myself am also invested here. And yes, I am currently investing a few €100 more. More on this in the next portfolio update. In general, I would like to at least double or triple this investment in the coming months. So what are the biggest risks associated with Monefit SmartSaver? Essentially, there are three major risks. First of all, it is of course possible that the Credit Star Group, as the parent company of Monefit, becomes insolvent. We will first take a look at this risk, how high the risk currently is, what the numbers say, and what the outlook is at the moment are, of course, the most important aspects. Next, we will address the liquidity of the Credit Star Group in the second point and how it currently stands, also based on in-depth questions and publicly available statistics. Finally, there is the risk that the returns on the underlying loans we are investing in may not be as high as expected, and therefore they may not be able to pay us as investors the 7.25% interest. How high is this risk? We will also take a detailed look at this. Yes, and if you want more information about Monefit, as mentioned, check out my experience report. I've linked it in the video description below with all the information on usage, pros and cons, my own experiences, and much, much more. You can find everything linked below in the video description, including my bonus link, which gives you a 2% bonus on your investment within the first 60 days, a bonus that you won't receive with the regular registration. But first, let's address the fundamental question of how high the risk is that the Credit Star Group, as the parent company, will go bankrupt. Ultimately, all the returns, daily payout options, and well-performing loans mean nothing if the parent company goes under and a bankruptcy administrator is appointed, for example. First, all payments to investors are frozen. Because this insolvency process can take long for investors, even with valid claims, which one would want to avoid. The risk of this happening is initially reduced by the fact that the Credit Star Group is not just anyone, but one of the largest lenders in Europe when it comes to consumer loans. They are active in 8 markets in Europe and are monitored by the relevant regulatory authorities in each individual country. Their annual financial statements have been audited by KPMG since 2019. They have been their auditor. They are profitable, having made 5.4 million in 2020 and 5.8 million in 2021. In 2021, I inquired again about how strong the Credit Star Group actually is, and I was told the following. The group has existed since 2006, has been audited since 2007, and has issued 37 bonds since its founding, in addition to financing on Mintos, which we will also discuss shortly. Furthermore, according to their statements, revenue has grown by 34% and the loan portfolio has increased by 25% over the last 12 months. These are all strong values, and I do not expect the Credit Star Group, as the parent company of Monefit SmartSaver, to become insolvent in the foreseeable future. This addresses the major point, yes, the first point regarding risk, but it is also directly related to the second point, namely liquidity. It is particularly important in this context that the Credit Star Group was unable to repay its loans on Mintos on time last year due to the interest rates for loans on Mintos skyrocketing because of the overall state of the global economy and rising interest rates. So that is definitely a negative point, but one must also say that a lot has happened since then, and we always want to look at the most current figures and developments, and that is exactly what we are doing now. At the turn of the year 2022-23, a total of $8.3 million in payments from credits was outstanding to their investors on Mintos. And as we can see from this chart here, these debts were only slowly paid off starting from the turn of the year, and then from April 1st, they were paid off really strongly and now amount to only half of that, approximately $4 million. I also inquired here about when they will repay the remaining $4 million, and the answer was very clear. By the end of May, that is, within the next 5 weeks, they will clearly adhere to the repayment plan with Mintos, according to their own statements. I am very curious to see if this will happen, and I already have confidence in the quick repayments that CreditStar can indeed repay their debts to investors as agreed, and that liquidity is now significantly better than it was last year. Mintos has also imposed higher interest rates on them here, as they were unable to make timely payments. Now these loans are accruing interest at 18% per year, which is very high, and this has prompted CreditStar to quickly repay these debts on their own. So exactly what has happened now? 2001, that is very good at first and shows me that, like many lenders, they had problems with cash flow during the corona crisis, because after all, the demand for their loans in large parts of the markets was very high, almost as high as it has ever been, one could say. But at the same time, the investors did not want to finance so many loans, as the global economy has gone crazy. There is really no other way to put it. And if you now have good borrowers who want more money, but you are not getting enough external capital from the investors, then you obviously have a cash flow problem. That is exactly what happened. I am now glad that this problem seems to be resolving itself more and more, and I will of course continue to keep an eye on whether these interest payments and the outstanding repayment of the missing $4 million will actually be made in 5 weeks. For me, the liquidity of credits is already given with the $4 million that have already been repaid. You don't just do that easily, I would say. This brings us to the third and final major risk with Monefit, namely the possibility that the returns on the CreditStar loans you are co-financing here could drop so significantly that they can no longer afford to pay these 7.25% interest to their investors. To answer this question, a look at the latest annual report of the CreditStar Group is helpful. Here we see that the return on equity at CreditStar across the entire group was 14.2% in 2021 and even 17.9% in 2020. The profit margin was 12% in 2021 and 15.3% in 2020. In general, it can be said that the return on equity should always be at least as high as the interest rate that the borrower has to pay. One must generate at least the amount of money that will then be paid out to the investors. I think that is clear to everyone. As we can see here, the 7.25% interest for investors, which can be withdrawn daily, is only half as high as the equity return of the CreditStar Group, providing a sufficient buffer, so to speak. The loans from CreditStar on Mintos looked different. The interest rates were sometimes as high as 17%, but they also had very long terms of 80 months, which corresponds to 6.5 years, making it not comparable to the daily availability of funds with Monefit SmartSaver. As long as I wouldn't want to lend my money to a CreditStar, personally, it is important to me that my PP loans ideally have a duration of less than a year and, at most, 2 to 3 years in case of doubt, as I want to see my money back here in the foreseeable future. There are also short-term loans from CreditStar on Mintos, but currently there is only one remaining loan package with an 8-month term and an interest rate of 15%, which corresponds to the average for short-term loans on Mintos. If we take a look at the interest rates of other short-term loans listed in euros, Senka pays, for example, 16.5%, while ID Finance in Spain offers 15% interest. If we take a look at the currently outstanding bonds from the CreditStar Group in this overview, and considering that CreditStar is currently financing itself largely through bonds, as we can also see in the annual financial statement for 2021, where the costs of its own debt financing are shown, once through bonds in the first row and once through other means, such as Mintos loans, we can clearly see in the overview of the currently outstanding bonds that their interest rate ranges from about 10.5% to 13.5% on the outstanding loans, which is also below the equity return. This is very important for assessing whether a company can afford these interest rates or not. In the past, the interest rate for Credit Star bonds was somewhat lower, as overall market interest rates were also lower. Most of the time, these were between 10 and 12%, but in some cases, they were also higher and in other cases lower, as here with 8% interest. Overall, I can say that Credit Star can afford the current market interest rates with the capital mix they have from bonds, Monefit, and Mintos loans, and that with the launch of their own platform Monefit and the 7% interest rate, they can easily manage this, especially as this share increases. It is important that they can secure lower financing costs in the long term with the establishment of Monefit, which will very likely account for a larger share of their financing in the coming years. This is crucial for the company and also strengthens profitability. The costs will be somewhat higher than 7% when looking at the situation realistically, as the money must also be available daily for many investors if they want to withdraw it. And that's why I simply asked how much money is held in cash by Monefit to ensure exactly that and always have a sufficient amount of cash on hand. 2001, and they have exclusively responded to me, this information is not available anywhere else on the internet, that it is 15 to 20% cash from the entire portfolio that they hold here, which is 5 percentage points more than the major competitor Bondora Go Grow. So, we have now covered the 3 most important points regarding the risk. As a final point, I inquired again about the current details of their loan portfolio, including how much interest they charge their customers. Many investors often ask me this, and that's why I wanted to include it here. Credit Star's response is that they charge interest rates of 25 to 35% per year on their flexible loans, which allow for deposits and withdrawals at any time. These have an average term of 8 to 9 months, and for the credit lines it is 2 years and 9 months. Of course, in 2001, some loans will default, specifically 3.9% of the loans issued per year, which is a good figure in this industry, but not an extremely good one. Because of all this, I am currently also expanding my own investment. An additional $500 will be added this month to increase the investment, and this will be further expanded in the coming months. You can find more about this in my portfolio updates. If you like and subscribe, to invest with Monefit SmartSaver at 7.25% interest per year with daily withdrawal options, use the link below for an exclusive 2% bonus. There are no limits on deposits and withdrawals. I am very curious about the discussion in the comments below regarding how you assess the risks of Monefit, especially in light of the new developments, now that things are looking significantly better at Mintos. With that, I wish you a good return and see you next time.